So, Steve, she's basically saying, we got to 3%, we would have been near 4% absent the trade sort of headwind.
Yeah, that's a great way to put it. And I'll give you one more number, Kelly, which is 2.5%. That's the number she begins to worry that a lot of countries at that point are in recession. I was a little bit floored by that 0.8 number. That's a big number on global growth to take off. And it being the trade is responsible for so much of the revisions. I think she's saying that if we're going to go into this new world of protectionism and less global trade, we're going to pay for it in less global growth.
Now, Vince, one of the questions is, in a way, for Wall Street, the scenario where the near-term outlook gets better, as it has, I guess, over the past week. The October 15 tariffs aren't happening today. Obviously, maybe December 15 doesn't happen. That can be upside, while maybe the U.S. and China disengaging in the long run has less of an immediate economic impact. In other words, is that a quote-unquote better outcome, this kind of Cold War scenario versus a hot back and forth where tariffs keep escalating?
A hot war where tariffs keep escalating is just bad for global trade. It creates uncertainty, disrupts global supply chains. So even a limited deal is going to help financial markets because it will include the intention not to do something bad, i.e. they will not increase the tariffs that are already scheduled. And the absence of a bad thing is a good thing. Another thing you do want to remember is we're talking about global growth. U.S. GDP growth around then is in the neighborhood of 2%. The total is higher because we include a lot of fast-growing emerging market economies. So you want to make sure you know at what altitude the plane is flying. Global is here, which is low relative to the scheme of things. The U.S. is a little bit lower than its long-term trend, but not a lot.
And so where is that, Steve, you or Vince, pick up on this, where does the cut in estimate mostly come from? Is it China declining, India declining, what? Europe declining, what?
It was, I'll let Vince weigh in right after this, but it was kind of across the board. Everybody was kind of down a little bit this year. India was down a lot, and there's a lot of sort of idiosyncratic things that's going to rebound next year. But China was down, and the emerging markets were down. They're supposed to come back next year, Tyler. But for perhaps most important purposes for our viewers, the advanced economies are not seen coming back a whole lot next year in 2020.
Vince, you want to jump in there and sort of take us around the globe?
Yeah, so there are two sources of drag. One is the uncertainty because we don't know where trade policy is going. And that just tends to depress investment. The other is you disrupt global supply chains and you actually reduce the amount the economy produces. We see a little bit of both because of the president's willingness to fight on many fronts. Remember, the IMF forecast assumes the next two rounds of tariffs go into effect. If we get a trade deal, that won't happen. But remember one thing the president always says, and that is trade matters more to our trading partners than to us. So the partial resolution of trade uncertainty and disruption of global supply chains will actually be better for our trading partners than it will be for us.
Steve, how does
and I just want to add.
Okay, go ahead.
I was just going to add real quick. I'm a little less sanguine about the ability to put that genie back in the bottle. I think that if you look at the political landscape in America, the Democrats are not real good fans of free trade. The Republicans certainly aren't anymore. So you may, I think the way Kelly put it earlier was great. We may go to a Cold War and not a hot war, but we're not going to be back in that regime of free global trade, which, in my opinion, has benefited the vast majority of people around the world.
All right.
Yeah, Steve, there's no question what Steve's saying. The profile of global trade is rotated down. It doesn't matter who's president in 2021. The world's changed. What's said can't be left unsaid. That will matter for growth. But if you're talking about the current state of markets, we could get some good news before that bad news seeps in.